Good morning, everyone. Thank you for joining us today, for being patient as we are getting set up on our Facebook Live feed as well. Hope you had a lovely weekend. We're excited that you're joining us here for your Monday morning standing series on COVID-19, brought to you by the Institute for Science and Policy, the Denver Museum of Nature and Science, and our lovely partners at the Colorado School of Public Health. I'm Kristen Uhlenbrock. I am your host and moderator for this series, and I work at the Institute for Science and Policy. Really excited to have all of you joining us and seeing where you're tuning in from. So as Nicole mentioned, if you tuned in a little bit before 8:30, this series today is on the economic impacts of COVID-19. It's almost impossible to talk about the coronavirus pandemic without talking about the massive economic contraction that's happening right now. This really is unprecedented in our modern economy. And today, I'm not going to spend much time introducing this topic, probably because I bet that most of us have a strong opinion or perspective about our state of affairs. But also, I'm going to let our experts do a lot of the talking. They have a wealth of data and information about our recovery, as well as some stories to share around our economic downturn. So I want to spend the time with them today and allow plenty of time for us to ask questions of them. So just a quick housekeeping reminder, if you've joined us here on Zoom, go ahead and open that chat feature. That's going to be where you're going to ask us your questions. We'll keep an eye on those throughout the presentations, and we'll incorporate some of the questions into the Q&A portion at the end. If you're watching over on Facebook Live, you can type in your questions into the comment feature. We've got eyes on that as well. Incorporate those questions over here back onto the Zoom platform. So we do want to hear from you, so please feel free to take full advantage of that chat feature as we monitor that. Let me go ahead and introduce our speakers before I pass this off. We have Kelly Brough joining us today. Kelly is the president and CEO of the Denver Metro Chamber of Commerce. The Chamber represents over 3,000 businesses with 300,000 employees working for those businesses here in Colorado. Prior to joining the Chamber, she directed an internationally recognized leadership program, was also the chief of staff to the then mayor, John Hickenlooper, and was the first female director of human resources for the city and county of Denver. And a common theme, she was also the first female snow plow driver at Stapleton International Airport. And of course, she is the first female CEO of our Denver Metro Chamber. She likes to say that her goal is to be putting more Coloradans to work in really great jobs. We're really excited to have Kelly with us today. We also have Richard Wobbekind joining us. Rich is the Associate Dean for Business and Government Relations, Senior Economist, and Faculty Director of the Business Research Division at the Leeds School of Business at the University of Colorado Boulder. As Faculty Director, his responsibilities include developing an annual consensus forecast for the Colorado economy and performing various economic impact assessments. And he also produces the quarterly Leeds Business Confidence Index for Colorado. Rich is a member of the Governor's Revenue Estimating Advisory Committee and the Boulder Economic Council, and he is an advisory board member for the Western Regional Science Association. He teaches MBA students in macroeconomics, public policy, and managerial economics, and he has received multiple awards for teaching excellence from the students at the Leeds School. So I have two excellent, very well-informed speakers joining us today. So let me turn this over to them. I think Rich is going to go with us first. So good morning, Rich. How are you? And welcome.
So we should be good now?
Yes, good morning.
Good morning, and thanks for inviting me. It's a pleasure to be here and a pleasure to be sharing a session with the very famous Kelly Brough. So I'm very happy to be here. I would like to sort of start by saying the intention over this next 10 to 12 minutes of presentation is just to set a little bit of groundwork for where we are in the overall picture in terms of the economic situation. We've talked about this going in, and there's some key points that I want to make as we look at this. I'll reinforce some of these with slides, but some of them are important points to sort of set the context. Number one, as we know, there's been a resurgence in domestic cases in certain parts of the country. This, of course, impacts the underlying recovery, if you will, of the larger macro economy. The national economy and the state economy were both on very strong footing prior to COVID-19, at least as measured by unemployment rates. We can talk about other types of indicators as well, and you're certainly going to hear a lot more about this from Kelly in her comments after I conclude. The CARES Act and the Federal Reserve certainly have helped mitigate some of the impacts. Whether that's sufficient is a question at this point. Whether there needs to be additional stimulus. Of course, you know, this is being discussed and it's a political sort of hot potato right now. But what they have done in the past, at least, really seem to help in terms of getting us to where we need to go. So I'll talk more about that as we go through. Certain industries have been disproportionately impacted. And so that's something we want to look at as we view the slides. We want to talk a little bit about that, certain sectors of the economy. One point I really want to highlight is people are getting really excited over some of the employment numbers, and I think they're only telling part of the story. So some of the slides I'm going to show you are going to address some of those pieces. What you also will see is Colorado is outperforming in the recovery. We're an above average state, if you will. Probably not too surprising, but given our leisure and hospitality sector and the size of it, that is a little bit surprising. So we'll talk a little bit about that as we go along. And then the last part is, you know, structural changes. What kinds of things are going to come out of this that look like they're temporary? What's going to be permanent? And of course, this is a question that lots of people are asking and people don't have complete answers to by any means, but I think it's an interesting part of the discussion. So moving along,
Rich, I think you need to share, can you share your slides? I think that you're kicking off into your data, right? There you go.
Oh, sorry.
Thank you. That's okay. Your intro was great.
Okay, good. So, so what we're showing on this particular slide is sort of how much GDP would be on a normal path versus what it is now. And why am I starting with GDP? Well, because it's the measure of national output. And we, as much as we would like to say Colorado can recover totally by itself, the reality is we're part of a much larger entity. We have a tourism industry that gets people from all over the country and frankly from all over the world. We have businesses that sell to other businesses, B2B types of products. So although we can look at local retail and local types of services, we really need to be talking about this in the larger context of a national economic recovery. And of course, what you see on this slide is that roughly how much GDP is going to be lost in this particular downturn. Very similar if you were to take the area below the slide between the red line and the blue line, very similar to the 2007 to 2009 recession. But the recovery path is quite a bit different. So as we move along, this is what we're seeing, and we saw the second quarter GDP drop by 33% roughly. Most of us believe the third quarter GDP is going to come in at a positive 25%, and so somewhat of a snapback. And that particular view sort of supports, you know, sort of the quote V. People have been talking about a V-shaped recovery. But the reality is with some sectors taking such a long time to come back, particularly leisure and hospitality and transportation, air transportation, arts, entertainment, and recreation. So when you think about those sectors and how long they're going to take, it winds up being much more like a swoosh-shaped recovery. We had a lot of income in the month of April. That was, of course, we got the check in the mail from the federal government at $1,200 a person, a tax refund under a certain, if you were under a certain income level. And that really boosted income, even though GDP dropped so dramatically. We saw a big boost in income, which has helped retail sales recovery in the economy. Of course, you know, we suffered with a shutdown of this type. We had never experienced it before, a full shutdown of the economy. We saw 22 million jobs lost over a 2-month period. And at this point, we've seen about 9 million of those jobs come back. So still, when you net those things out, our continuing unemployment insurance claims in the economy last week, again, national numbers, about 14 million people are on continuing unemployment insurance. So we have a big hole. We need to get that, you know, those jobs back, and that's what we're working on. This particular slide shows you how long it took to get the jobs back in all of the different recessions we've had over time. And what I really like to highlight is, if you look at the last two to the right, you see the 2001 recession and then the 2008 recession, and they continued to take longer and longer times to get the jobs back, the so-called jobless recoveries. We don't think this is going to take as long as the 2008 to 2014 recession, probably somewhere in the 40-month kind of time frame to get these jobs back. And the reason is the financial system has been propped up so dramatically by the Federal Reserve System that we're not seeing financial instability, not in the housing market, not in the corporate credit market, not in the banking system. We were on better footing going into this in terms of all of those different markets, but we also have seen a really significant response by the Federal Reserve in terms of getting those markets propped up. You also know that this has been disproportionate or disparate in terms of where it's been impacting the economy. So this is a slide we put together based off of BLS data, and it shows you in terms of the income levels where those jobs have been lost by wage group. The high income lost very few jobs, the middle income a little bit more, and certainly low income households have lost most significantly in this downturn. So it's been really disproportionate on low income folks. You'll see that a little bit later in the presentation. So right now, this is again national. We have seen the regular unemployment rate come down to 10.2%. The so-called U6 rate come down to 16.5%. That's workers who are looking for jobs but aren't finding full-time work. So a little bit of the underproductive labor is added in that bigger number, but still a pretty dramatic drop down from where it was to 10.2% in the most recent monthly data. But if you look at the right-hand side, you'll see that that doesn't affect all people equally. You certainly have higher unemployment rates if you're Black or African American, Hispanic or Latino, if you're a woman, and certainly very much by education level, much higher unemployment rates with lower levels of education. So we really have a challenge thrown down with this particular recession, highlighting things that were there before, but are now much more pronounced with where the job loss has been. So looking specifically at Colorado, this slide, I'm not going through all of these numbers, but I'm just making the case that these are the kinds of metrics that we typically look at as economists and say, how would you call Colorado a top 5 state or a top 10 state? We would look at things like output and employment and income growth and wage growth. Those types of things, unemployment rates are very, very important metrics. But they don't tell the entire story, and you're going to hear more in the comments that follow from Kelly about the underlying pieces. You don't, for example, see the educational attainment I mentioned to you on the earlier slide. So these are the types of things we look at, but maybe we need to be looking at a broader set of things as we come out of this and think about how can we really have a great economy down the line. Looking at what happened in March and April, you can see a dramatic job loss on the left-hand side shows the percentage, the right-hand side shows the number of jobs, and you can see a few categories accounted for about 73% of the job losses. Accommodations and food services, healthcare and social assistance, arts, entertainment and recreation, and then retail and other services. Other services include beauty parlors, tattoo parlors, beauty salons, hair, and so on. Personal services are in that category. So you can see where this really hit. And then what have we seen May, June, and July as of data released on Friday? We've seen some significant recovery in the last several months in places like arts, entertainment, and recreation, and accommodations and food services, both percentage change, but also just in a number of jobs, we've seen some nice recovery there. But remember, they were very, very hard, heavily hit. So there's still very high levels of unemployment in those categories. I do want to highlight down the bottom, we're starting to see the secondary, what I've been referring to as the collateral damage. Down at the bottom, you see state and local governments are starting to lose jobs, as well as transportation and utilities. And the transportation and utilities is really air transportation. So we're starting to see the impact of the drop off in air travel really impacting the transportation sector. We like to look at numbers and feel good about life. And so this is the initial claims for unemployment. You can see how they spiked, dramatically spiked from where they had been historically. And we have seen a nice downward trend on those. And even in Colorado, the continuing claims have gone down, have continued to go down. And the most recent were very positive. That said, we came out with an unemployment rate of 7.4%, 15th best in the nation. Eighth best in the nation. It's really a good number. It was exciting, but it was driven partially by a large number of people leaving the labor force. And so we had a smaller number of people looking for work. So they're not considered in the unemployment data. And that is a little troubling when your workforce starts to shrink like that. So why did it shrink so much? We don't have the qualitative information, but it's something we really want to look at as we go forward. When you see, again, where has the pain continued to exist? So the red line is the maximum number of claims we saw by industry sector. The tan is the current number of claims by industry sector. You can see that we still have the most claims by far, the accommodations and food services, retail trade, healthcare, and social assistance. So we're really continuing to see those areas in terms of continuing claims, the jobs not coming back, completely coming back or coming back fast enough. This is an underlying thing economists like to think about, deep thoughts about. How long does it take for a temporary unemployed person to wind up being a permanently unemployed person? And so the longer it's taking for these jobs to come back and these people to go back to the jobs they had, the less likely it's going to be that those jobs actually return for that person. So we went into this and 80% of the people were saying in surveys they thought they were going back to their same job. The numbers more recently are down in the 60% range. And right now we have like 56% is what's happened so far. So we really have a ways to go to see whether or not all of those jobs are recaptured. This is just a little bit of a Colorado thing, since people can be dialing in from anywhere watching this presentation. Just a quick comment about this has disproportionately hit the tourism-based counties in terms of unemployment. That shouldn't be too surprising. And you can see it as least hit. The lowest unemployment rates are out on the Eastern Plains, where they had very low percentages of the employment base or in leisure and hospitality or in retail. So you don't have those sorts of impacts that were so strong in the urban area, but also especially in the mountain tourism areas. Some of the changes in my last sort of comment here. So this is the permanent change piece. Where are we going? I think we're going to, this slide highlights the telework changes that we've seen out there. And certainly workers are indicating they expect to be able to continue to telework. This has been disparate based on national data from the BLS. We see that it's been easier or adopted more by Asian and white employees than by Black or Hispanic. It also has been adopted a lot more by higher educated, or more of the jobs that were available to be done at home were in the higher education categories. But we also expect to see change over the long haul with where people live. There seems to be a pretty significant movement now to less dense areas, which creates different transportation. Office arrangements might very well change. The nature of retail and e-commerce, and certainly the digitization of things like healthcare and education have been vastly accelerated. So we do believe some of these are lasting and long changes. Some of them may go back to normal, if you will, when we're done, when this, we get the vaccine, which is really the punchline. That's when this thing really ends, when we get to sort of a vaccine status. So I'll be happy to take your questions, but right now I am stopping my share and flipping the screen back over for transition. Thank you.
Thank you, Rich. A wealth of data there to unpack during Q&A and some other thoughts I'm sure people will have regarding your presentation. But let me bring Kelly into this conversation. Good morning, Kelly. How are you today?
Morning. Great to be here. Thanks for having us.
Great to have you.
Well, let's jump in. I'll do a quick presentation. I'm going to really focus on some work the Chamber began in 2018 called Prosper Colorado, and then share with you how COVID-19 has impacted the priorities and the focus, frankly, the urgency of that work. So one thing I want to tell you is we recently did some research at the Chamber with our membership. As Kristen said, we have 3,000 members. We now have those 3,000 members represent 400,000 employees in the state of Colorado. So I mention this because they're a great source of information for us, and we rely on them a great deal. So as you can imagine, as we entered this situation in March, we had to quickly, like everybody else, adapt. What's the most important thing for us to be doing today for those members and their employees? And we said we have two goals. The first goal is if we can keep employees in their jobs, if we can keep them up and running and not losing those jobs, as Rich said, that makes a huge difference. And so we've done everything we can to support our employers in being able to keep those employees. So paycheck protection and other grants and resources. The second priority was let's help those who've lost their jobs and find them new ones and make sure they have the support they need during this period of time. So I want to talk with you a little about what our economy was like. Rich touched on some of this, but you can see here is for 3 years in a row, U.S. News and World Report has ranked our region as the #1 economy in the nation. This is a great place to sit. And yet, 2 years ago, right after we got our first ranking, we started to do some research in our state to really understand because we saw some disparities. And while we continue to be ranked as one of the best states to start a company, #1 in prosperity in terms of closing the gap for women and people of color, we felt like there was some data out there that told us maybe we weren't as good as we thought. And if this is the best economy in the nation, this isn't good enough for us. And so I'm going to jump ahead a couple here and share with you some of the data because I think you'll find it very compelling. So 1 in 4 Coloradans, almost 1 in 4 Coloradans is on Medicaid. That was pre-COVID. We predict that will significantly go up where more people need that support. And remember, Medicaid is a federal government provided, but it's based on income levels. And so before COVID, best economy in the nation, 1 in 4 Coloradans was on Medicaid. Only 35% of women in our region, and most of my stats are going to be regional because that's our primary focus, make more than that median wage or average wage in our region. And yet close to 50% of our population. And while we really recognize that education is really important, what we also found is when you controlled for education, you found that many in our state, people of color and women, if they had a college degree, were still making less than a white male without a college degree. And I think for us, that was also very compelling. And now I want to share some stats with you about COVID specifically. 10% of the people who are hospitalized with the virus are African American or Black in our region. That's about 4.6% of our population in the state is what is represented by our Black population, and yet 10%, almost twice the rate. 38% were Hispanic. They make up about 22%. And our white population is about 68%, and yet only 37% are who were being identified or who were testing positive for COVID. You can see even the virus, so it makes you look a little deeper. What could that be about? Rich had talked about labor participation rates around the country. Colorado has actually, in the last couple of years, had some of the highest labor participation rate last year, meaning more people were working. just since the virus, 97,500 fewer people are working in our economy. Our unemployment rate was very low coming into this. And by June, we were over 10%. In July, we started to come back a little at 7.4%. But as Rich said, we have got to move quickly to help people get back into jobs. And frankly, as you will see from our point of view, not any job, but really good jobs. Women over the age of 35 experienced an 8% decline in that labor force participation. So one of the largest rates of decline that we saw when the virus hit. The other thing we know is before the virus, we looked at our numbers. Women earn 81 cents on the dollar. This is a national figure. So for every dollar a man earns, women are earning 81 cents. When you look at women of color, this is a significantly worse number as well, particularly our African-American women. That said, women are more likely to drop out of the labor force since the virus. And in past recessions, that gender gap actually can narrow. We've seen it narrow. This one, it's predicting it will expand by about 5% for some economists are predicting, meaning women will be earning 76 cents on the dollar since the virus hit. I mentioned education is often by many of us seen as the great equalizer. And you saw some numbers there that really show not such an equalizer. We also looked at who starts jobs in Colorado, and what we found, women and people of color are much less likely to start a business. And then we looked at the cost of buying a home or being impacted by the cost of renting. So what we call cost burden, more than 30% of your income goes to cost burden. And what you can see is our Black and Latino families have significantly more cost burden on their homes. That's of course directly correlated to the jobs, the reality of if those high-paying jobs have underrepresentation, then very clearly we know that that underrepresentation is going to show up in jobs as well. So this is just a process of what we've been going through. What the virus really did for us as we're going through this process to really develop goals specifically around reducing these disparities, it really highlighted. And then of course, the tragic death of George Floyd, which brought to light, I think, for our nation in a new way, it took a very long time, the racial disparities. And we have used this to really emphasize the urgency of the work. And so what we have done now, you'll see, is really created goals around jobs and really good jobs. That when it comes to jobs, we want to get our unemployment rate back to under 5%. We want to increase the number of women and people of color who are outside of that less than $40,000 wage, getting them much higher in our jobs market, removing those disparities. And when it comes to housing, really addressing housing. In this nation, by the way, we still build our wealth through home ownership. That's the primary way. And I saw someone's comment earlier that talked about, hey, real estate, maybe this is not going to be like 2008, 2009, because real estate isn't as directly affected. I would offer to you, I think it is unclear how real estate will be affected in this pandemic. We see, how many of our employers who have commercial property work downtown or tech center, how many of their workers have gone remote. It is an interesting question of what will that look like in the long run. I think those shared workspaces in terms of, where you're rotating desks and just renting it for a period of time, there's some real struggle there as we go forward. And often commercial real estate flags for residential. So I think we have to wait and see kind of what happens with real estate from this pandemic. I want to get to your questions, so I'll turn it back to Kristen so we can do just that.
Thanks, Kelly. Thanks, Rich. Rich, if you want to pop back on your camera, we're going to go right into Q&A. We have a lot. So maybe let me just start, and this is going to be a big question, and I don't know who's going to want to take it first. But I hear, and I'm sure many of you have also heard, the fact that we've kind of pit COVID-19 and this pandemic and protecting public health against reopening of the economy. It isn't necessarily a zero-sum game, but it's a very complicated you know what I mean, balance between policy and trade-offs and what we're doing. I'm wondering if either you have a perspective on both, like how do we balance both at the same time of providing good jobs, of providing economic stimulus, of reopening our economy at the same time of protecting public health. And there's lots of layers to this, but let me start big picture. Rich, do you want to start off for us, and then we'll have Kelly follow up?
Well, this has been the sort of, million-dollar question, if you will. How long do we let this go? Quite honestly, the country was not prepared for this when we went in. We didn't have the health resources in place, not to mention, obviously, we still don't have a sort of a treatment. So, you can look at this and say, we shouldn't have ever done it. And I have friends who truly believe we shouldn't have ever done it. I think the question, I don't think we could have handled it. So that's just a personal opinion, and I don't want to get this politicized one way or the other. The question on reopening, I think, is a much more interesting one, because as I was suggesting, the longer you stay closed, the longer it's going to be that temporary stuff becomes permanent. And so to the extent that starts to happen in other parts of the country that have been more restrictive after the rise, I do think it's going to really prolong the economic recovery. So it's a huge trade-off, and we're talking about lives, and we're talking about jobs, and are we going to have enough money to pay for all this stuff if we taking so much out of the federal budget? So I think it's a very controversial question.
Yeah, this is the one, Kristen, where if we had a crystal ball, it would be way easier to figure out how do you navigate and what are the right decisions to be made here. I think a couple of things. One, I did see our behavior matters. And so, we've all learned better behaviors. Frankly, it will keep us healthier, not just in a pandemic situation, but washing our hands and not touching our faces and all of those things. But our behavior around wearing masks, I think nobody understood in the beginning how important that was, right? We thought masks were about protecting us when really what we're doing is protecting everyone else. And I'm going to give you an example. I think it was in Tennessee. There were two women hairdressers. This is a job you can't do socially distanced. So when they were shut down for a while, when they got back, they saw a massive number of clients, both of these women. They wore masks through the entire thing. A few days later, both are tested and realize they have COVID, but they were asymptomatic. Not a single one of their clients got COVID. I mention this because I think as we've learned more about the virus, what we realize is the steps we personally take to protect those around us can be extremely helpful and critically important. And it can remove this notion that everything has to be, that we can't do both of these things, reopen thoughtfully and protect each other from the virus. And I think that's what we really have to focus on right now, because these are lives and these are jobs. And we also have ways of monitoring that I think your audience will find interesting. Excrement, poop in my world, a very technical scientific term I'm using because it actually has some of the biggest load of virus and can be most easily tested. And I think what we're finding is there's ways that testing can be done to start to isolate where are the issues. And it's our own institutions of higher ed who are driving some of that cutting edge sort of approach that I think we should be extremely proud because it's that kind of work that will allow us to reopen safely and get people back to work.
Yeah, let me pick up on a few of those threads, Kelly, but let me start with the behavior one, because I think that's a really fascinating thing is behavior. How do we model our behavior in this economic recovery? You know what I mean? When things are open, but people are potentially afraid to go back and participate in our society. So let me start with Rich on this, and then we'll turn this back over to Kelly. But Rich, do we have the tools when we look at kind of our economic recovery and this recession we're currently experiencing compared to past recessions, which don't have this public health crisis and challenge, right, of a pandemic, and which is impacting people's behavior and people to go out and participate in consume in our society. So do we have the right tools to really understand if they're the right ones to help us measure and to think about how to reopen an economy when there's a huge behavioral component to it? Rich, do you want to start for me?
Well, I'll give it my best shot. Yeah, I mean, that's why we're looking at confidence surveys, and we're doing all sorts of high frequency data analysis now. I'm talking about different firms, different parts of the government, trying to get the sentiment of people on whether or not they're going to be willing to move back. But your point is well taken. I mean, some people are going back to restaurants 2-3 nights a week, and other people are not going back to restaurants at all. So do we know how the behavior is going to work? And frankly, some people are more nervous about the virus than others. Certain age groups are more nervous about the virus than others. So we are trying to do a lot more behavioral surveying in line with the specific issue that we have here now compared to what we have in the past. You're right, traditional economic stuff didn't focus on how scared are you going to be to go back to a retail store or go back to a restaurant.
I love how you framed it, Kristen, because a complex problem, the most complex problem, is when you have to change somebody else's behavior to accomplish the objective. And I'd liken this to our country has a history of recognizing sometimes we sacrifice some personal, and what I mean by this is the wearing a mask, the controversy around it. I don't mean jobs. I mean, we sacrifice a little of our personal freedom to take care of the rest of our nation or the world. And I saw some comments about, hey, listen, this is just a virus, it's a few symptoms that make you uncomfortable. I want to be really clear, right? This is a virus that for a number of people in our population, it's actually deadly. And I am the caregiver for my parents right now. They live in their home. Under the order of Kelly Brough, they're on full lockdown because what is crystal clear in my family is if my parents contract this virus, they will die. And that is really a big deal to me and very important that I not lose sight of that. The largest population who's contracting the virus right now is 20 to 29. That's not the case. It was over 80, you'll recall, when we first got into this pandemic. And I think it's because we've gone through so many steps to protect those most vulnerable, but it's not even age. I think there's other very real issues that can be underlying health issues that put people at great risk. And even if you aren't in that category or don't have people in that category, our community really does. And I think that's what we have to remind ourselves when we're complaining about the behavior changes required of us.
Let me build on that too, and take this a little bit into the essential workers conversation. And maybe Kelly, you can start with that. Some of the lower income folks, some of the people at risk are those that we deemed essential workers right out of the gate, and often don't have that choice and luxury of people like myself who can, work from comfort at home and quarantine. Have we had the right safety measures in place to help protect some of those essential workers? Have we done enough, or were there things that we've learned when all this first happened to where we are today? Kelly, do you want to start, and then we'll go to Rich?
Yeah, I have a daughter who's in that essential worker category right now as well, and and I think what we are recognizing is that often those are lower paid jobs, and they're coming in contact with the public. I think it's critical that we figure out how we protect them. And the way we protect them is we wear that mask, right, when we go in. And I do think employers have taken very seriously their obligation to protect workers. You see increased cleaning rates, you see complete change out in HVAC systems to ensure the air being rotated as the science advances. Understanding what else we could do, I think, has really helped us as well. But frankly, as a country, our performance in this regard is not great compared to the rest of the world at all. And I don't think we should lose sight of that.
Yeah, I would say, I would just add on that my two daughters and my daughter-in-law all are in essential category, and even they don't totally agree about how effective what's in place is right now. My daughter, who's in San Francisco with the San Francisco Public Schools, is, I would say, extremely nervous about the protections that are in place right now as they're doing their work. But I think we've made improvements. Honestly, we've learned a lot more about the virus. And so the more you learn about the virus and how it's communicated and the more you know about treating it, then I think we put better protections in place. And as was highlighted, we're seeing 20 to 29-year-olds, and we're seeing some of those things coming out really as more like social events driven than essential worker type of driven.
Yeah, the more people I talk to, I feel like everyone, my mom, for example, is an essential worker, right? And she's at an at-risk age category that like had given me fear from the very get-go about her going into work. So I think a lot of us have hopefully some relationships or experience with those, and it's difficult to navigate. And I remember her early on, being very concerned about her health and safety. So, okay, let's take this back up a little bit to some more questions that we've had from our audience. We've had a few, which is interesting. I think these are going to be specific to Rich and Kelly. I don't know if you have answers too, which is tied a little bit around the stock market in per se. We had someone ask about the Dow Jones Industrial Average as a headliner. You know what I mean? When that's going down. So as a metric in essence, right? How is the stock market, you know what I mean? Should we be looking to that as how they're interested in seeing? For those who aren't saving and those who don't really are interested in what the stock market is doing, how is that a useful metric, particularly someone wanting to know, you know what I mean, as is aired on TV, right? As that headliner banner going across the TV. Should we be looking to that very much? And could you comment on that to some of our audiences?
So I guess there's several pieces to that question, even though it seems like one question. Historically, the stock market has been considered a leading economic indicator of the economy, 6 months to 18 months out. So one thing you could say is the stock market's going up because the broader underlying fabric of the economy believes that 18 months from now, we're going to be in a heck of a lot better shape than we are right now. And I think a lot of people believe that because I think they believe we're going to have a vaccine. We're going back to more normal things by the middle of next year and so on. So we'll be less, I guess, afraid to go back to the more traditional types of things we've done historically. But there's also seems to be a pretty big disconnect between Main Street and the stock market right now. And certainly a large percentage of a number of people hold stocks in their account and are certainly benefiting from this. What I think we saw with this first piece of policy was some of that tax cut money for higher income folks. We know the spending rates of higher income folks were lower than the spending rates of lower income folks. I think where's that money going to go? You're going to put it in a bank at almost 0% interest. I mean, you can buy a stock, transact a stock right now, costless. There's no brokerage fees. You can do it on an app while you're sitting home unemployed. Robinhood. I'll plug them, but I'm not plugging them. So the money had to go somewhere, and money's flowing to the stock market. And I think that may be an answer that sort of says there's a bit of a disconnect here right now between the overall performance of the economy and the stock market.
Let me turn this to Kelly, and Rich, you can add on too. So Kelly, you often talk about needing to create great jobs. And you actually talked a little bit about some of the innovation, right, when it comes to research that's coming out from the COVID-19 with monitoring of it in our sewage and whatnot. Are there other opportunities that you're seeing for emerging economies or jobs that you would consider really great jobs? And maybe make this a two-parter and let you pick apart what you want. And are there opportunities to kind of rethink some of parts of our economy? Someone wrote about a circular economy. What are some of your thoughts on some of this innovation that you're potentially seeing coming out from this and opportunities for us to do better with our economic model?
Yeah, this is where you're really reminded that the potential, right, think about how long we've all been talking about, should we take our workers remote? And and we were kind of on a slow roll to do it. And here we are today, 100% remote. And those employers who could do that would say they're probably doing pretty well. I think so that's one area, right, where I think you're going to see continued remote working and value for it as an increase in demand. But there's also a lot of services we've shifted, curbside pickup and, just different approaches to services that I think will become a new level of service being asked for by consumers consistently. And then I think there's rethinking of when, how much we can actually do on demand. And all of those are kind of predictable, I think, by people who are joining us today. I think a lot about, we draw the conclusion, we need more coders, we need, but I think that's true. Technology is becoming really important, but I think there is a huge loss that we're all trying to figure out how to fulfill. And that's the socialization. I have 60 employees at the chamber. And what's interesting is the thing we miss most is seeing each other and being together. And yes, we do Zoom, and yes, we do Teams, but we really miss being together. And I would say I am worried a little about innovation. There was some research done, this was years ago with Google. When they went remote, what they realized is they wanted to bring employees back because innovation went down. That natural bumping into each other in the workplace, talking about what you're working on with somebody who doesn't work on it, often introduces new ideas or new approaches. I think that's the piece we're all hungry for. And I think what we're discovering is there's ways we can be in the workplace safely. We all have mandated how to do that, and requires you to fill out a form every day, take your temp. By the way, 60% of the people do show symptoms, so that really can work. And then wearing a mask, because the 40% who don't, it does help ensure we're more protected, but it allows you to be a little closer together and working. And I think that's what we kind of have to figure out. I also think that can reintroduce jobs into the economy again when we come back into the office, because here's the jobs that are hidden, Kristen. The people who clean your office, their job became way more important until we all stopped going into the office. A really important role though, and it gets reintroduced when we go back in. Security, like jobs that we often forget are dependent upon us being in that building. So it's not as much innovation as a recognition that there is a way we could do this. What we probably can't do effectively yet is all go to a bar and dance and drink and take our masks off and believe we're really safe, because that population is least likely to show the symptoms and know that they should be tested. I know that's not really what you were asking, but I do think a lot of those traditional jobs can be brought back safely, and we're proving it out. And frankly, Colorado's doing a great job of proving it out.
Staying on the theme, I'm beating this drum too much, but some of the folks that are, temporary are going to be permanent. And we know some people are permanent. So if we miss this opportunity to try to upgrade skills, in line with what Kelly was talking about, if you can upgrade people's skills, then they can move into better wage category jobs, because I think we're going to need less employment in some of the jobs they were in. Quite honestly, we figured out how to do this restaurant thing much more efficiently now. Sure, we're going to go to the same number of people here sometime in the future, but we've got it. I mean, the websites are amazing when you do take out curbside pickup or ordering or whatever. Everything is just like, the digitization of this stuff has been amazing and just moved so rapidly. So I really think we need to use this as an opportunity as we, re-educate this, an element of our workforce. And again, unfortunately, this fell very disproportionately on certain elements of the society. Unlike the last recession, the industries that were hurt in the last recession were like financial services. Well, that tends not to be a low wage area, and it took a very big impact in the last recession. It's taking almost no impact in this recession. So, it's a different workforce we're looking at.
Hey, Kristen, I just wanted to mention on this, right? I saw somebody wrote about the distrust of institutions. And I think this is such a real issue, right? Where we do have to figure out, you know, because for some time we've all had access to the internet. If I blog it, it must be true. And which has made us really be like, what can I trust and what is a good source? And frankly, organizations like the museum and the Institute, just much more critical to getting good information out. I think the rebuilding of trusting each other and trusting institutions is really probably an important part. I really appreciate somebody raising that. I don't know all the answers to it, but I think it does require that we acknowledge it and we be a little vulnerable and open ourselves to hearing why there isn't trust and asking what we could do to try to help build that trust, because I think it is required for people to agree to some of the things we all need to agree to if we're going to come out of this faster.
Absolutely. It's very foundational to many of our conversations, Kelly, and actually leads quite well into maybe a closing question that I'd like to ask for both of you. Rich was talking about the 6 to 18 months. I would love to hear, you know, what is that one hope you have or one opportunity you would like to see us move towards in the next 6 to 18 months as it relates to our economy? Rich, why don't I start with you, and then Kelly, you can have the last word.
Well, I know, again, controversial, but I think it really depends on our continued success at treating and limiting the spread. And right now, the spread seems to be limited in certain age brackets, and those age brackets, frankly, are less vulnerable in terms of death and serious injury if they don't have other types of mitigating conditions. So I think bringing the death rate down is significant, and getting the virus under control until such time as we have more of a vaccine. So I'm amazed at what the healthcare industry has done. I'm really impressed, but I don't think you get back to normal, quote normal, for a lot of these industries until we're back to normal seating capacities. We're going to have huge turnovers, for example, in restaurants. We're seeing massive right now new business formation with payroll on a weekly basis around the country. So people are definitely seizing the opportunities and definitely moving into some of those spaces. And that would be my number one piece, that, you know, we get the entrepreneurial spirit really moves forward and really helps absorb the workforce and move the country forward.
Yeah, because Rich covered the, you know, let's make the decision that we're going to reduce the spread and protect people, and then we can continue to reopen. I'm going to emphasize something else. I think when we looked at disparities, what we really found is education does help. It increases people's opportunity. But what we also found is that many of us as employers, this is public, private, for-profit, across the board, all three sectors have a lot of requirements for a four-year degree where a four-year degree is not required. We see that as a barrier to providing opportunity and reducing some of the disparities we're seeing, and helping move people who have been unemployed into really good jobs in the short run. So the thing I would ask everybody is talk to your employer. If you are an employer, look at your job descriptions and ask the question, was the four-year degree a proxy in this job, and could I remove it and invite more applicants who could access this opportunity at this moment when they need it the most, and train them, and they could be very successful in this job? I know the answer is yes, and I think that alone could help start to move people back into this economy, because we do have jobs out there, and they are often remote jobs right now.
Wonderful. Thank you, Kelly. Thank you, Rich. What a very rich conversation this morning to kick off our Monday morning series. So thankful for both of your time and effort to help us put this together. So huge thank you to both of you. Very good words of wisdom and nuggets for us to ponder and share on. Thank you to all of our audience today. You were very thoughtful, engaged, and of course we could not get to all of the millions of questions that came in, but we're really appreciative for you staying engaged all along. I do want to make a quick plug about this idea of trust. It is foundational to a lot of what we talk about at the Institute and the museum, particularly around trust in science. We actually just hosted last week a panel on why do we trust or mistrust medical science. But we actually went much broader than the medical sciences. And so if you're interested and reading the kind of written recap or watching that recording from last week with an excellent panel, go to our website, institute.dmns.org. You can find that, and then you can find our whole COVID webinar series as well to catch up on anything that you may have missed. That's where we're going to be placing today's recording and a written recap as well. So thank you to all my colleagues at the Denver Museum of Nature and Science. Of course, it takes so many behind the scenes to make this possible. Thank you to our speakers today, and a huge thank you to our partners in this series all along, the Colorado School of Public Health. We'll be back here next Monday talking about aerosols and airborne transitions of COVID-19. So thank you, and I look forward to seeing you here next Monday. Hope you have a great rest of your week.
Take care. Thanks, Kristen.
Thank you.